Welcome to the Drive-By Entrepreneur podcast, which exists to bring current and compelling content to entrepreneurs and influencers of small to mid-sized organizations. I'm John Frank, fellow entrepreneur and the owner of Third Road Management. And with this podcast, we will connect with a variety of experienced and dynamic individuals to shed some light on both the art and science of entrepreneurship. Before we begin, I'd like to thank our sponsors. First, my very own Third Road Management, a company that brings fractional CFO services to small and mid-sized organizations by revolutionizing the CFO suite. We'd also like to thank Two Hound Red, a brewery and restaurant located in Glen Ellen, Illinois, that is focused on creating classic, innovative beer and food. And finally, we'd like to thank NWC Media, which provides inbound marketing technology, project workflow management, and efficiency consulting to organizations of varied sizes, who is also the producer of the Drive-By Entrepreneur podcast. All right, Mike Drai, welcome to the Drive-By Entrepreneur podcast. Thanks for being here.
Thanks for having me.
Yeah, great to have you. I always like to start out by explaining this is episode number 3. So explain a little bit what we're about and what the podcast is for. But it's the mission of the podcast is to bring current and compelling content to entrepreneurs and influencers of small to mid-sized organizations, right? So we're getting subject matter experts from a variety of different areas, right? My business, your business are all sort of like interconnected and intertwined with a whole bunch of other people that have expertise in specific areas. And the idea is that to add value to people, we just kind of want to get interesting content out there from interesting people with different perspectives and, grow from it. And that's why we're here.
That sounds great. I'm happy to be a part of it.
Great. Well, just to get this out there, you and I have known each other for a long time, obviously. Long time. 1996, yes. Which is getting up there, right?
Yeah.
But for those that may not be familiar with it, you and I are friends from the University of Illinois, go Illini. Mm-hmm. So it's great to make that connection as well. But for anybody that doesn't know you, I wanted to give you a couple minutes, however long you want to take, to talk about you and Rising Point Capital and what you guys are up to. So maybe tee it up with just a little bit of your background, and then as it pertains to Rising Point, talk a little bit about what you guys are up to there.
Yeah, absolutely. So, well, as you mentioned, I went to University of Illinois. Actually, I should back up before that. I grew up in the Chicago suburbs, Brookfield, Illinois. Yeah. I went to University of Illinois. I was originally an engineering major for a couple of years, as were you, if I recall.
That's correct.
Then we both saw the light and came over to finance to do God's work. And I graduated in 2000 with you, and I moved to New York City, where I worked in investment banking for about almost 5 years. Moved back to Chicago, entered private equity. I worked for a firm called GTCR, which is a larger firm in our industry. And then I moved to, I did my MBA at Kellogg, and then I joined a firm called Sterling Partners, which is kind of like a middle market private equity firm in Chicago. I spent 10 years there, and then ultimately started Rising Point Capital Management as my own firm with a partner in early 2019. And I've been doing that kind of since then. Incredible journey, ups and downs, certainly stressful at times, certainly rewarding at times. But what we do is we're focused on really being the first institutional capital into founder-owned businesses, and helping those founders really sort of set the stage for kind of a long-term transition. Because what we have often found is that, particularly with the smaller, kind of lower middle market business, like a lot of times the business lives, breathes, and dies by the founder or the owner. They've typically, for good reason, underinvested in, systems. I shouldn't say for good reason, for understanding, right? They're maximizing cash flow, but they, underinvested in systems or people, finance, things like that. And so we're really focused on partnering with them, bringing capital and expertise to partner with them to try and kind of build out the business around the core dependence that a lot of that business has on that original founder.
Yep.
And then we also have like many folks in our industry, we have kind of an industry focus. We're more focused on what we would call, we kind of describe it two ways. One is we'll say it's industrial maintenance and infrastructure services. So maintenance, repair, overhaul, or capital construction like activities, usually on like a capital asset. It can be anything from paving a street to doing industrial cleaning in a refinery or a power plant, to building a utility scale solar farm. And then we also describe it as field-based services. So think of it, two guys in a truck, two girls in a truck, route-based lawn care service, pest control, things like that.
Very neat. And I think, one of the things I was excited about in terms of bringing you in is, number one, now you're an entrepreneur yourself, right? So I had that experience for myself, before Third Road Management was a thing. I was kind of just helping some businesses out on the side, kind of thing. And as a consultant of sorts at that time, I would have all these external perspectives, right? And I think that those were valuable as well. But then having started Third Road Management and building my own business, right? I not only appreciate what it's like to look at other businesses, but I also look at things through the lens of, well, I'm an entrepreneur as well.
Exactly.
Right?
Exactly.
So I think that that's really valuable in your case for you to be able to, when you're sitting down with business owners that are, thinking about an exit or a partial exit or whatever, to say, hey, I'm right there with you. I'm doing the same thing.
Living the joy and I'm living the pain with you.
Yeah, absolutely. But so thematically for today, and I've seen this over and over and over again with our clients or just, people I'd meet in general, is that, this world of institutional investing, right, when it comes to purchasing businesses, right? It's almost like this, when the businesses get to a certain size and it's, maybe it's 5 million of EBITDA and up, but more so it's 10 million and up. I feel like there's a lot more knowledge transfer, that goes on, in those size of businesses.
Yep.
But, for companies that are even a little smaller, sometimes it's this like labyrinth of, I just don't know. There's no resources available for me to know what do I need to do as a business owner to, make my business look attractive to a potential investor. And so I thought thematically it'd be good for us to, kind of dial in on that a little bit. We'll see where it goes, but, sort of the core concept here being, what is attractive to an investor when you're looking at a business, right?
Yeah.
And you've been doing this for a long time, so very much appreciate, the value you're going to bring in terms of your expertise. And I think it's going to be a good conversation. So
yeah, great.
Okay, so I have three areas that I thought that we should head on. One being the presence of positive attributes. Second being the absence of negative attributes.
Yeah.
And the third being, the intangibles that make a difference.
Absolutely.
So let's double click first on the presence of positive attributes. What are some of the things that you're typically looking for when you're assessing an opportunity? And I mean, I don't know what exactly your numbers are, but like, I imagine you see many more opportunities than you do take the time to invest in, right? So when you're looking through that lens, what are some of the positive things that you're looking for in a business?
Yeah, absolutely. And some of this I'll just speak to generally in terms of sort of how folks in our industry sort of look at businesses, and not necessarily even specifically the specific industries that we're looking at. But John, I'll tell you, I think that most investors look at the world through like a framework of kind of like market model, business model, and then company specific attributes.
Okay.
Right. So like, and I think it's sort of like almost like a funnel, right? Where you're starting at the top and it's like, hey, if you pass the market test and it's an attractive market to be in, then let's talk about the business model. And if we pass the business model test, then we're talking about the specific company. And that's how folks kind of think about the world. So I think an easy way to start with this is to kind of start with the market and how do folks look at the market and what's attractive. And So I'd say, we're looking at a business, and it's kind of like, okay, well, what do you do? Like, what's your business? What you might be an outsourced lawn spray or pest control business, or you might be a paving operation, or you might be a fence rental operation, or you might be who knows what. But what's going on in that market? Is it a growing market? Do you have long-term attractive macro tailwinds behind you, like from population growth or investment in infrastructure or green energy or whatever else it might be? And is that like a place where, as an investor, I feel like that's going to be an attractive place, not just for the next couple of years, but for the next 5 or 10, because as an investor, we're looking down the road and things need to be good then, not just good now.
Yep.
So what makes a market attractive? Again, I think it's a attractive market with strong tailwinds driven by some, kind of macro trend, like a couple of those ones that I mentioned. It could be things like, fragmentation of competitors could be good or bad, because sometimes if there's too much competition in that market, then you have no ability to take price and no ability to you're just competing on low bid or low price, which is a tough place to be. On the other hand, sometimes people view fragmentation positively because it's basically like, hey, there's a lot of other companies to go out there and buy and quickly gain scale and build a leader in a particular market. And so it can kind of go both ways in that respect. I guess other market factors would be simply things like, are you kind of, is any part of the market, any part of the value chain, whether it's whether it's one of your suppliers or whether one of your customers, does anybody in that value chain have structurally significant power over you? And I think that is kind of another market attribute that people think through quite a bit.
Okay.
So anyway, I start there. It's just kind of like, hey, is the market attractive? Is it growing? How many competitors are there? Kind of so on and so forth. And if you get through that, then you're getting down to the business model. And okay, from the business model perspective, I'd say most investors kind of look at the world and say, well, what makes a business attractive? It's obviously the ability to grow and be a larger, more significant enterprise down the road, which is presumably going to be of more value.
Yep.
But it's also, I think, about stability and predictability, right? Because sort of an obvious statement, I think that we all know that if you're operating in a more stable environment and if you're able to have more dependability and predictability around your business, it's a little bit easier to make decisions, right? Yep. It's easier to plan for the future. It's easier to make hires. It's easier to spend on the new IT system. It's easier to do all those things. And so I think a lot of the big business model attributes that people look at are basically, hey, like what drives stability and predictability? Do you have recurring revenue or like repeat revenue? And recurring revenue would be, you've got a monthly, annual charge kind of business,
right?
And that's great, right? So it's kind of like, do you have recurring revenue or repeat revenue? I think is a major attribute that a lot of folks look at. With sort of the opposite of that being completely project based, right? With relatively little sort of repeat revenue, but we're focused on the positive attributes, I guess. I think certainly a differentiated service or product would be a big thing that folks look at. It's like, are you just are you shilling some commodity product that anybody else can sell or that anybody else can produce, or are you doing something that is specialized? Doesn't even necessarily have to be patent or copyright protected, but it just has to be different. It has to be hard to do. It has to be something that you can bring to the table that not everybody else can do, or else, you have no ability to take price. You have no ability to compete on anything other than price.
And when you're talking about that, are you talking about from, what serves the client better? Are you talking about what scales? Are you talking about both? Like when you're thinking about that, what are you thinking about? Because I have my own example that, I could share with you.
I think, I I think really talking about both. I mean, as it relates to, I guess, as it relates to differentiated product or service, I actually am more talking about as it relates to the client's perspective,
Yeah.
right? That because we've got, I'm company A,
Yep.
right? I'm company A and I'm selling you, and here's company B and they're selling you, and if we're indistinguishable in terms of what we're offering, how are you going to make the decision?
Right.
Price.
Yep.
And that's a tough place to be.
Yep.
And so I need to distinguish myself by having something differentiated in terms of service offering or product, approach to the market, marketing, whatever else it might be that can bring some differentiation between myself and my competitor.
Got it. Okay. Yeah. I mean, just not to whatever, but for Third Road, just by way of example, I think this is what you're hitting on. A couple of things come to mind for me is that, we're building our model based upon where everybody that works for us is a W-2 employee. They only work for us and they don't work for other places as well.
Yeah.
And I didn't realize this. And this market is building as we go. 5 years ago when I started this, I'd literally never heard the word fractional CFO before. Now it's fractional everything. But comparatively speaking, what I hear over and over, whether we're interviewing candidates or, just meeting with different companies or something like that, that they really like that, both on the candidate side and on the client side, that we don't have this, hub and spoke 1099, matching model, which, from a scalability perspective, I think that we have the right, system in place, right? But I had that on the front of my mind as you were talking about it, is like, this is something that I talk through almost on a daily basis with, people we interview and clients alike, is like, this is how we're different from everybody else in the marketplace.
And I think that's a perfect example. And I think, by the way, I think that's incredibly compelling just from my perspective. So,
okay. Very good.
What else on the business model attributes? I guess I would say, this overlaps with the market a little bit, but one of the points I made on the market side, but, customer concentration, obviously on the dependability and stability standpoint, like customer diversity is generally considered to be better.
Right.
Now, I will tell you, the smaller business gets, or the more nascent, or in the lower middle market, you tend to see a lot more customer concentration. And it's all related to, not all, mostly related to either personal bandwidth of a highly talented founder or a relationship that a highly talented founder sort of built and cultivated and really sort of built that business, serving that customer better than anybody else is serving that customer. Right. And it's great because it allows that person to build that business and grow. But in the context of sort of valuation and attractiveness to the next investor, it's tougher, because if that concentration is too big, then you get into this line of questions of kind of like, well, geez, like, how do we know that customer is going to stick around? Is the customer only here because the founder's here? What happens if something happens to the founder? What happens if something out of anybody's control whatsoever happens and the customer decides to go somewhere else? What does it do to the profit or the value of that business? It could be could decimate it.
Yeah.
So customer concentration is certainly a significant thing that people think about just from the business model. I guess those are some of the biggest ones on the business model side that I'd say that really get significant focus.
Okay. So you talked about the market and the model, right? And then your third point was
company specific attributes.
Yeah.
Well, and in that case, a lot of times it comes down to are you built to be a platform? Are you ready for expansion? Are you operating based upon knowledge and systems inside of people's heads, or have you figured out a way to translate that to organizational excellence and process?
Right.
And I think that a classic example of some of this stuff would be, it's a recurring theme, but it goes back to is there a real team around the owner?
Right.
Or is it all about the owner? A real team around the owner might be somebody who's, a reasonably advanced finance professional. Are they keeping monthly books? Are they closing books on a monthly basis? Are they do you have an actual, IT or ERP system in place? And for the avoidance of doubt, like many companies that we look at are on QuickBooks, which
Yep.
isn't a bad thing. It's not considered to be sort of the next generation.
Yeah, from a scale perspective, if you're trying to take a business to be 3, 4, 5 times what it would be, or if you're talking about, acquisitions and integration and stuff like that, it's probably,
Yep.
to your point, not the platform that, ultimately you would have them on, right?
Yeah.
But you encounter it all the time, as do we,
Yep.
in terms of what we do. But yeah, it's part of it, right?
And then, but so I'd say a lot of the company specific attributes come down to, again, is it about a particular individual, or has the company sort of invested in what's needed to grow from that point?
Right. Right. Yeah. I mean, we see it over and over and over again too. I always tell people that the hardest part about entrepreneurship is that if you want to continue to scale it and grow it, that the best way to do that is increasingly find ways for you to lose responsibilities.
Yep.
Right. And, I'm an entrepreneur, you're an entrepreneur now. And it's hard. You know what I mean? It's hard to let go of things because you want it to be just right. You know what I mean? You want things to be done the way that you want to do it, to the excellence level that you would do it. You want a client to be served in the way that you would do it. You want people to be treated in the way that you would do it, all those kind of things. But like if the funnel is only so wide as the owner of the business, right? You're going to be tapped out in terms of how far you can grow because there's only so many hours in the day.
Totally agree.
Yeah.
Totally agree. You can only go as far as those two hands and not as far as what everything else
Right.
can take you.
So,
Yeah,
I mean,
and
yeah.
John, another thing I'd add on company specific is just sort of quality of assets and quality of, if you're a business that operates with trucks or equipment, like are those trucks or equipment new? Are they dated? Are they, and I think a lot of that stuff will play into the value of the business from the perspective of, has this been reinvested in? Has it been kept up? Is it ready for a new owner?
Very good. Very good. Okay, I love that. The market, the model, and the company's specific attributes. I think that's a good way to, filter through it because any business you can sort of look through that lens, right? Any other, presence of positive attributes that just come to mind that you want to hit on that fall into any of those categories or?
Yeah, absolutely.
Okay.
I think, I think, two other business model attributes that I should mention. One I think would be capital efficiency, and I probably should have started out by saying this, but many, in our world, many businesses get valued on EBITDA, right? Which is theoretically it stands for earnings before interest, taxes, depreciation, and amortization, and it's meant to be a proxy for cash flow, basically, for the business, and so capital efficiency plays into cash flow. So if you're a business that has to go out and spend a huge part of your profit on capital equipment every year, like trucks or cranes or pickers or whatever else it is, that's going to play into your valuation because at the end of the day, it eats into the cash flow that the business is generating. Similar dynamic with working capital, which is the term for basically how much operating capital do you need to keep in the business to run it? Like how much accounts receivable do you have in any given time period versus how much accounts payable, how much float are you basically getting from your own suppliers?
Yep.
And so that is another sort of user of capital that comes into play as people are sort of thinking about the attractiveness or lack of attractiveness of the business. And the more capital efficient you are, the less of your cash flow that gets eaten up by that, the more cash flow you're generating and the more valuable you are.
Right. And, for anybody that would be listening that, this is where our worlds, intersect a little bit, right? When you talk about working capital, I mean, there's a lot of like nightmares that come to my mind about people kind of not understanding it. It's like this little, unless you're an accounting or finance person, you may not draw the lines completely immediately. So it might help to just unpack that a little bit.
Yeah.
If anybody's watching, listening, whatever. But working capital, a simple definition is your current assets less your current liabilities, right? So on the current asset side, typically it's cash, accounts receivable, and inventory. And on the current liabilities side, it's, your payables, your accrueds, your, stuff that's going to turn over in the next 30 days kind of thing, or 30, 60 days, whatever it is, right? So if somebody, again, if your multiple between your current assets and your current liabilities is like, say, 3-to-1 or 4-to-1 or 5-to-1, that means you're way asset heavy relative to your liabilities, and your working capital is getting eaten up. And like a frequent symptom of that would be like you're collecting slow, but you're paying fast.
Yeah.
Right.
Exactly.
I always say
perfectly said.
No. Collect fast, pay slow. Or at least in proportion to one another, right? You know what I mean? So ideally, right, you want that, sort of 1-to-1, maybe a little bit better than that, so you don't, feel squeezed or anything along those lines, right? But it's a term that not a lot of people have a good understanding of, but like from an investor standpoint, it's a huge question that comes into play, particularly at the end when they're getting ready to sell a business and they get a working capital peg thrown at them. And they're like, what do you mean? Those are my receivables.
Yes.
And they're not connecting the dots between, yes, but you're getting a multiple of the profit. But we can have an entire episode on working capital, I'm sure. But
I have oftentimes encountered they're taking the receivables, but I'm taking the payables. I'm like, no, that's not how this works. But
it's a package deal. It's a package deal. All right, that's fun. All right, really great stuff. That I like that capital working. I like how you said that two different ways. You said working capital intensive, but you also said, capital improvements intensive,
Yep.
or if somebody's not familiar with that term, capital expenditures, right? What's typically on your statement of cash flows, and that's purchasing of equipment,
Yep.
more or less,
and then. I guess one more I'll add is just scalability, right? So it's kind of how quickly and easily can you scale your business? What's the incremental profit on each dollar of revenue that you sell? And I'll use a classic example that actually software businesses tick off a bunch of these very attractive business model attributes. And effectively, if you think about a software business, it takes a bunch of money to develop a software backbone, and then basically every dollar of revenue from that point forward is effectively, not quite, but effectively all margin, right? So the software companies are the definition of infinitely scalable businesses, basically. Right. And so contrast that with like on the other hand, if for every dollar of revenue that you get, you need to add another person or add another machine or whatever else it is, like that is fundamentally a less scalable business because you have to sort of constantly invest along the way as you're going to
right.
achieve that scalability. That's the one other thing I'd mention.
You get the recurring revenue streams once you've got it stood up, developed. Obviously there's costs associated with running it, making it better, fixing it, all that kind of stuff, selling it. But the margin's very high. I mean, it's the same thing I've seen, in the past with like pharmaceutical stuff, right? Like all the costs is on the R&D side, and then the cost of the prescription, medication is, fractions of a penny, to make, right? One, pill or whatever it is, right? Mm-hmm. But those businesses are, they're just like a different, animal in that way. But they typically sell off a multiple of revenue as opposed to a multiple of profit, for that reason. But okay, we talked about the presence of positive attributes. I want to talk a little bit about the absence of negative attributes, and I want to be careful not to just say, well, that's the inverse of
Yeah.
positive attributes, right? Because you could easily say, we want low customer concentration, so high customer concentration's the,
Yeah.
but like, I mean, I interact with a lot of businesses all the time, and there's certainly things that are negative attributes as well.
Yeah.
And I didn't want to pre-populate your mind with anything that would go through my head, but like from your perspective as a professional investor, what are some of those things, either like yellow, orange, red flags, that, might stick out in a company that makes it, even if they have some positive attributes, makes it a little bit like, I'm not sure I can swallow that one. You know what I mean?
Well, actually, so one thing I'd say quickly is, nobody's perfect, no business is perfect, right?
Right.
So everybody has some sort of negative attributes along the way, and I think, from the investor perspective, like everything is sort of, you've got sort of things are viewed on a continuum, right?
Right.
And you could have, in your perfect situation, you could have all positive attributes and no negative attributes, and no business is free of negative attributes.
Yeah.
And it's simply a function of how they stack up relative to the positive attributes of the business, and also how those negative attributes are managed.
Yeah.
So like, what would be some major red flags? And I know you didn't want to do this, but I'm going to do it just for this first point.
Oh, here you
which
go.
is, I think the easiest thing for people to focus in on is customer concentration.
Yeah.
And we've discussed this, but it's the easiest thing to focus on, because it's just kind of like, you could live and die by that one customer, and if something changes and that customer goes away, then the business is fundamentally different from what it used to be. And I think that is the number one red flag that really comes up as folks look at a business. Look, I think a second negative attribute would be, and again, I think this is touching a little bit on what we talked about earlier, but the business has to be about more than you. It has to be about more than you. And if it just looks like there's a key person that is driving everything, and that the value of the business is that key person, that is a huge negative.
Yeah.
Because then the business is only as good as you, and it's
Right.
not as good as the business that you actually built.
Right.
So I'd say those are two huge red flags that people who are building businesses really need to be cognizant of. You need to, I forgot the term that you used earlier, but you need to make yourself useless.
Yeah.
Is that what?
Yeah, you're not useless. You need to continue to find ways to let go of responsibilities.
Yes.
Right.
Yes.
And that touches every aspect of the business. I always, when I think about entrepreneurs that, just not universally, but generally, I feel like people have a gift, right? They may be a really good salesperson. They may be a really good engineer. They may be really good, and on the engineering side, I'm referring to like, they might be able to build, some sort of IT software.
Yep.
They have a skill that they can leverage, kind of thing. Or somebody might be an incredible operator, right? And those are just a couple of the different things, right? But those are common ones that I see, right? They're either good at selling a product, good at making a product, or good at making everything work, right? And they're not that doesn't necessarily mean that, like, not everybody's built in the exact same way, right? The person that is great at operating the business may or may not be the best salesperson, right? May or may not be, the engineer or the person that's developing the product or the service, or, whatever it might be. So I always like to say, like, look, not every one person can do everything really, really well, right? So you need to build a team around you that sort of like, augments your skill set, right?
Yep.
In a way that's going to collectively make the organization better, right? But then in terms of, if you really, really want to eventually sell a business, it's going to be more attractive to an investor, and therefore worth your investment, if you're talking about eventually getting a multiple of cash flows on this, for you to develop and put people in place that help, the operation, the business run even without you there.
Absolutely.
Right? Like, and that's a hard thing for people to kind of like get their arms around, right? And commit to. But, ultimately I know it's what works, right? And so, when I was thinking about the negative attributes side, certainly I was thinking about the owner that, maybe is the top salesperson, right? But oftentimes too, it's like it doesn't end there. It's like every decision within an organization ultimately is from the top.
Yeah.
Or if it's a family, maybe it's within a family, right? And you're like, well, if this family is going to get a big payday, now you have the top salesperson, top operations person, and the overall CEO of the business that are now exiting the business, right?
Yeah.
So I don't know. I talk about this ad nauseum, but I'm like, look, the more that you can let go of things as time goes on, even human resource matters, hiring decisions, firing decisions, marketing decisions, like bring people around you that's what they're good at, right? And then, let go of responsibility.
Yeah,
right.
I totally agree. And I totally agree. A massive negative attribute would be a lack of financial reporting and financial clarity, because financials at the end of the day are the way that you communicate. It's the language of communication to an investor base and an outside party how your business is doing, right?
Mm-hmm.
So if you're a business owner, right? Because you're there every day and you're talking to this person and that person and you know what's going on. But if you don't have accurate financial reporting with accurate metrics and the like, KPIs, key performance indicators, then you have no way to communicate to an outside party what your business is and how it works.
Yeah.
So I think that is a negative attribute that we would see in most lower middle market and even middle market businesses. Is just the financial house is not in order. And I think my strong advice to anybody would be to get that figured out, get it in order, because if that looks tight, if it looks if it works, then it just generates confidence that will pay itself back in spades in terms of the value of your business.
Is this where we talk about the honorarium for you coming on the the podcast? I was waiting for you to, lay it on me, but no, there is no honorarium. But if you are looking for a second career, go to thirdroadmgmt.com/careers. There may be a business development role in your future. No, but no, I agree with you, which is kind of, I think, I mean, obviously, you bring a wealth of knowledge to the table, but I just love, you do something totally different than I do. But I think we come together in that way, and it's helpful to me to hear somebody from the other side of the table, literally, in this case, right, echoing some of the same things that I talk about, right?
Yep.
Because I think it fits, and I think the more it reinforces, maybe it'll move people more in that direction of like, hey, this is probably the way we should go. So.
Yeah, and I honestly can't emphasize that enough, because like you'll encounter with good reason, right? Like if I was as we talked about earlier, you and I are running our own businesses, right? But a different type of business than most of the ones that we're investing with or working with. But if I was running my own lower middle market business, I would probably fall into the trap that I think I see many folks fall into, which is you're maximizing cash flow. And I said earlier, cash flow matters. That's what you're valued on, right? But there's a nuance, right?
Yeah.
And if you're maximizing cash flow at the expense of building the team around you and at the expense of having financial reporting that you can use to communicate to your investors, you are maximizing $1 in your pocket at the cost of 5 to 7 to 10 in sale value of your business.
Right.
And balancing that piece, I think, is very important.
Right. So we've talked about positive attributes, negative attributes. The third part that I thought we could touch on was like just some intangible stuff. And, I don't want to put any, words in your mouth, but when I say intangibles, like just picture a company that, you've looked at one point in time or the other, right? And actually picture two. Picture one that was like everything was good on paper and they just had this thing, right? About it, right? Versus one that was like, hey, it looks really good on paper, but I just don't know, right? Like thoughts around like intangibles, like what are some of the just things?
I think, well, I think there's two things I'd mention here, and it's going to overlap a little bit with what we already talked about, okay?
Right.
But one of the intangibles is just team
Yeah.
and people around the table, and it's not just about having the structure beyond just one person or two people or whatever it is. It's about having those people be good and professional and have a good working relationship and enjoy being together and having a good culture and et cetera, right? So like that is a real, we've touched on some of that already, but I think that's an important intangible in the context of a business.
Well, and I think in there, I'm going to use some of my own language for it, but you're not just talking about warm bodies, right? You're not just being like, oh, they've got a team.
Yeah.
What you're saying is, yeah, they've got a team, and that team is very competent,
passionate, transparent.
Chemistry, culture. They want to be there. They're excited to see one another. They've got positive disposition. You don't feel like they're gonna knife each other in the back the second that the boss walks out of the room, kind of thing. But yeah, I see that as a huge positive. I like to call it the parking lot test. It's like somebody pulls up in the parking lot, you look out the window, you see him, you're like, oh, great, Jim's here, Bob's here, Susie's here, right? Versus like, oh man, here we go, here we go. Everybody wants to work with good people.
Yeah.
You know what I mean? So that I see that as one intangible, and I didn't want to like bait you into that one specifically, but like there's other things too. So like anything else that comes to mind for you when you
I'd say another one, which again overlaps a bit with what we've already touched on, but I do think to try and build on that example you gave of, hey, everything's great, but or everything's great, but yay. I think a lot of it comes down to just on the margins, the ability to communicate the future. And like if in one situation, everything about the company is great, but the person we're talking to just kind of says like, I don't know, I'm not gonna put together a budget. Like who knows? Like it could be up, it could be down next year, right? Like, and maybe it's an incredibly honest answer, which I appreciate. But I actually think they're doing themselves a disservice, and I'll come back to that in a second. On the other side, you've got same business, and somebody says, well, yeah, here's what we think we're going to do next year, and here's why, and here's our risk factor down, and here's our risk factor up, like relative to that. It could actually be the same answer, the same outcome, but it's just communicated in a different way. And kind of what I'm trying to say is I think every business at the end of the day does have some insight into where their demand is coming from. They have some insight into where the work's coming from, unless they're truly just waiting by the phone for the phones to ring, and that's not a good thing.
Yeah.
And I think that the intangible that I'm trying to circle here is that you have to come up with a way to communicate that.
Yeah.
You have to come up with a way to be able to communicate that to people outside of your organization. And whether that's based on, it could be a customer by customer buildup of here's how much revenue you think you're going to do with each customer next year. And of course it's going to be wrong, but like it's a framework.
Yeah.
Like, or it could be, there's a million different ways to do it, but it's about having that framework to forecast demand. It touches on some of the stuff we said earlier, but it's just about, it touches on this intangible of confidence and clarity in terms of where the business is going versus we're just going to go wherever the wind blows us.
Right.
And that's it's a key difference in terms of being able to communicate to folks, confidence in the future of the business.
Right. So the word that came to mind when you were saying that was a plan, right? So there's a plan that has, the financial side of it, right? And sort of like numerically, we can come up with some assumptions on sales and margins and, whatever, right?
Yep.
But then there's okay, if that plan is going to happen financially, what's the plan behind it?
Yep.
Right? Like, what's the marketing plan? What's the sales plan? What's the pricing plan? What's the, headcount plan? What's the infrastructure plan? Like if your plan calls for, making 10,000 widgets a day and your factory is only equipped to, do 5,000 widgets a day, you get a problem. You know what I mean? So, there needs to be like layer one, financial layer two, but I actually think another part of that, and I'd be curious for your read on it. This touches upon our last podcast episode that was talking about, vision for an organization and mission for an organization. It's like, where are you going and why are you going there?
Yeah.
And I just feel like too often, companies don't do a good job of articulating, why they exist and not only why they exist, but why do they need to continue to exist? In this case, for an investor.
Yes.
Right? Because if they don't need to continue to exist, then why do you need to buy it?
Yeah. You're absolutely right. It's very well. It's kind of what's the purpose, what's the company's purpose, what's the drive, and what's their reason for existence. Exactly. Right. I think that's very well said.
Yeah. I was thinking about intangible things in terms of this as well, and I'd be curious for your feedback. But like I'm like first of all, let me back up. The way that I view the world, and I think we view the world at my firm, Third Road, is the CFO's job, right, is much more than just finance and accounting, right? In the way I view it. And I always cite this, but there's a Wall Street Journal report it's a couple years old now, but it said something like, I think it's 75 or 80% of the CFOs of the Fortune 1000 organizations do not have a CPA designation. Right. So I always like to think of it as, look, to be a great CFO, you need to be a good strategic, financial, and operational leader. Yeah. And I think when I think of operations, people often think of operations in terms of like execution, making the widgets, so on and so forth. I think of it like that, but I also think of it as a hub and spoke kind of thing. Like you got to kind of understand all the different areas of a business, right? So an intangible for me is if I'm looking at any one of those, spokes in my analogy in isolation, I could be like, yeah, we'll fix that later, right? Like human resources, for example, often very underinvested in, right? There's risk factors with that. There's labor issues, there's, employment, just generally related
Funny
issues,
way to
right?
get yourself in trouble.
So, yeah, right, exactly. And, if you looked at that issue in isolation, you could look at it and say, yeah, we'll fix that when we get in there, right? We know how to do that, right? But then if you turn around and you look at IT, right? And, they've got the same servers that they've had since 1999 and, like they just haven't invested in like cloud-based technology.
Yeah, right.
And, I don't know a ton about IT, but I know enough to kind of be dangerous, you know what I mean? Or know who to call kind of thing. But like, I was curious for you, given your seat, when I look at a business, I'm naturally just like hound dogging to find where all the cracks are, right? Because, we want to fix them. But for you as an investor, as an intangible, like if you look in, across those different disciplines, right? Or the cogs in the wheel in my example, right? Do you like, look, if 2 or 3 of these things are wildly underinvested in, that probably means that there's been like sort of gross underinvestment in the organization. Like, is that a thing for you or is that not a thing? Do you look at it as more like, hey, we can fix that stuff?
It's like truthfully, it's probably the latter.
Okay.
It but it but it but it impacts the business in terms of the way that it's valued.
Right.
So it's kind of like I don't. The reality is, I think not having some of that stuff won't necessarily. It's not a totality that it will scare somebody off, but it does affect the quality of your business, and frankly, the quality of the valuation of the business. Plus, the reality is, it's probably affected you over time, whether you believe it or not, or realize it or not, right? Because like not having, that strategic CFO that you were describing, or that capability, internal or external, or underinvest in IT or things like that, has probably affected the ability of your business to sort of perform at its best.
Right.
But it's also gonna affect the valuation around a potential sale, or around an investment or whatever it would be, because that investor needs to make that happen.
Right.
And there's risk around making those things happen, and investment and so on and so forth. And so therefore it affects it there as much as anything.
Right. And that's, I think, an area that people don't necessarily draw a line between the dots, is that, if you as a professional investor are going to at least, well, not, I mean, mentally and physically reduce the valuation of that business, because you're like, whatever the price is, you know that you're going to have to spend that money
Yes.
after it's closed, right?
Exactly.
So it impacts the valuation of the business, regardless. And that also speaks into, the owner of the business, right, wearing, different hats, right? And the reason why they got to let go and surrender these responsibilities is because if you look at it and you say, okay, the owner of the business is the top performing sales rep. Well, guess what? If they leave, you need to hire a top performing sales rep to replace them, right? And that costs money. If they're the CEO of the business, you need to replace that. If they're the whatever within the business, you need to replace that. So the best way to do it, in my mind, is to get all that infrastructure, all the right people in the right place, so that, they're going to take a salary, right? And it's probably going to be something that's generous, right? But it's much more justifiable as a, adjustment to the cash flow of the business. If they want to add that back to their EBITDA in terms of the valuation, and they could easily explain that away and say like, hey, look, I make X amount of dollars per year, but like, honestly, my team handles the show.
Yeah.
That's probably worth a lot to you,
yes.
right? Very cool. Very cool. Well, I think you brought a ton of great insights here, a lot for me to digest, and I think it's going to be great for a lot of people that are, even potentially interested in pursuing a sale down the road, to hear from, someone like you that's been in your seat for, 20 something years now. So that's great. In terms of the businesses that you're specifically looking for, do you want to take a minute to just, I know you talked about a couple of different industries, but it's just in case somebody's listening, watching, know somebody, family member, whatever, but like, what are some of the, attributes, industries, things like that, would be good to give you a call?
Yeah. I think, look, first of all, from a size range, we'll look at pretty much anything from, maybe as low as 5 million of revenue up to 100 million of revenue. And even in some cases, actually even in excess of that. I touched on the industries a bit earlier, but just to recap on that, we're typically investing in kind of a field service business. So, skilled or semi-skilled labor doing some sort of maintenance, repair, overhaul, construction activity on an asset, a building, a road, a bridge, a power plant, a refinery, kind of so on and so forth. And I think, and there's a bunch of other derivatives of that, whether it's rental or even some light manufacturing or light distribution around that are all kind of connected, are all things that we would look at. Our primary focus is really on being the partner to that owner, oftentimes founder, entrepreneur, and helping them take, their business. I don't want to say to the next level because it's probably already at a fantastic level, but we do know how to help build out some of those pieces that we've talked about might be missing to build a larger, diversified, differentiated business of scale that's got a plan for where they're going. Mm-hmm. And if you can do all those things, you've got a pretty nice business and a pretty nice path in front of you.
Do the business owners that you work with, are they typically going to want to be along for the ride?
Yeah.
In terms of leaving some equity in? I mean,
with very few exceptions, our typical investment is one where we're coming in for 60 to 70% ownership stake, and the seller retains 30 to 40%. You're trying to set up a situation where it's the classic second bite of the apple. So they get a significant cash outlay at the first transaction. Can diversify their wealth. Make sure they're taken care of. Make sure their family's taken care of. But then retain a stake in the business because there will be another exit. It's not usually, it's the typical time period would be 5 years, but It can be less, it can be more. But where that second bite of the apple is at least as big as kind of the first go around.
Okay, very cool. All right, at the Drive-By Entrepreneur podcast, we like to end with 3 questions.
Fire away.
Totally unrelated to anything. It's just kind of fun. So I don't know if you're a podcast person in general, and as I usually say, I know your number 1 podcast is the Drive-By Entrepreneur podcast by Third Road Management. But if you had a number 2 podcast, what might that be? It could be business related, it could be fun, whatever. And if you don't have a podcast, a book or something like that.
On the podcast front, I just can't remember the name of it. So I'll tell you on the book front. So I'd say there's all these biographies out there about Elon Musk, right? Okay. And it's like love him or hate him, and he's annoying right now because this whole thing with Twitter, and it's just like, and I've kind of personally had my fill of them, but I've read 2 or 3 books, biographies on Elon Musk, and I think they are a must read for anybody in today's day and age.
Okay.
And it doesn't matter how annoying you think he is, you got to read it because he was the sheer force of will and energy and vision that he brought to doing what he's done is really unique. And I fully recommend reading a book about Elon Musk.
Absolutely.
Even though I think he's super annoying right now.
He definitely has some unique attributes, but I can very specifically remember, coming off Tesla, right, was probably the first, sort of iterations of when I noticed who he was, right? But then when he started doing the SpaceX thing, I was like, this is the dumbest thing I've ever seen anybody. Like, what is he doing? He's going to waste all of his money, all this kind of stuff. And now he's like, launching, ships on behalf of NASA. You know what I mean? That's crazy. You know what I mean? And yeah, I love the boldness by which he, sort of leads the way as a visionary. And, who knows, maybe we'll be colonizing Mars at some point in time. That one I'm still very skeptical about. But, who knows? He's an eccentric guy, but a dreamer, and he's definitely built some really, really cool stuff. Best concert you've ever been to?
Well, this is easy because I have a recency effect. Okay. My wife and I just went to the Def Leppard, Motley Crue, Poison, Joan Jett concert at Wrigley.
Okay.
It was fantastic.
I heard that it was a long day. I heard that I think Joan Jett might have been the first one. They were like on at 4:00 p.m. or something like that.
And then the Poison, and then in our case, it went Motley Crue, and then Def Leppard finished.
Very cool.
It was great though.
Yeah, I've heard people say that Def Leppard sounded pretty awesome considering they've been doing it for a little while. So cool. And last question, a place that you've been that everybody should visit once.
Amalfi Coast in Italy.
Okay.
It's this very rugged coastline south of Naples. Couple towns there, Positano, which is a classic, like always photographed village. and another one, Ravello, which is up in the mountains. You can take a day trip over to Pompeii, which is also incredible.
Been there.
But I would definitely say Amalfi Coast of Italy.
Very cool. Well, thank you for your insights.
Do I get to ask
book.
you those questions now?
Sure, fire away. Favorite podcast? Yeah, you're the first one that has done this, by the way. So this might get edited out.
Drive by Third Road Management.
Yeah. Favorite podcast? I would say a couple come to mind. I've always liked How I Built This on the business side. That's NPR does that with Guy Raz. It's sort of like a very grown-up version of what we're doing here. He interviews people that have built like, huge companies, kind of thing, and it's very interesting. It's one of the mediums that drew me into loving this, which is like long-form interview podcasts. There's a couple other ones that are like that.
How I Built This?
It's called How I Built This.
Okay,
Yeah.
that's
Guy
good. Raz
is the host. It's got mountains of content in there by now. But like derivatives of that, and you're catching on a theme here, there's a guy who's actually a photographer, videographer in like Hollywood named Sam Jones. And you probably never heard of him, but if you were in Hollywood, I think you'd know who he was. But it's called Off Camera with Sam Jones.
Okay.
And he interviews a lot of like, artists and actors and things like that. Again, long form interview. And thematically, a more recent one is called Smartless. And, that's with Will Arnett. And,
I've actually listened to that one.
Yeah, Jason Bateman and Glenn Ellen's own Sean Hayes. It's a really good podcast. It's just kind of fun. It's an hour of just talking about stuff with other artists. And it's a couple of the ones that I like. Concert. I've been to a number of good ones, but I would say the like most memorable like experience I've had is we've done the 3-day trip down to Mexico on the beach with Dave Matthews and Tim Reynolds. I'm a huge fan of acoustic guitar, let alone Dave Matthews and Tim Reynolds. You're literally in your shorts and flip-flops. Most of the time, your flip-flops are off, standing in the sand, 50 feet away from the stage, and it's 3 nights of 2.5-hour concerts.
That's fantastic.
Yeah.
Now, what's your favorite Dave Matthews song?
Oh, now you're getting deep here. I would say "Lie on Our Graves" would be my number one.
Can you hum a few bars there? Or?
I think we're gonna spare the audience a few of those bars. All the bars, in fact. All right. One place I've been that everyone should visit. Oh man, that's a good one. I will say this, and actually, now that I'm glad that you brought this up because I've been meaning to talk to you about this for 20-something years. If you recall our senior year, we had this idea of going to Europe and doing the whole tour of Europe right after we graduated thing. Yes. And one of us went, and I'll give you a hint, it was me.
Right.
Yes. You had to go to investment banker school.
Yes, I did.
But that experience of going to see Europe, I think was very formative for me in terms of like understanding that, we're a small part of a bigger world. So that was really great and formative, and I got to see a bunch of awesome places, including Pompeii. But it was like 36 days on a bus, just kind of cranking around Europe, and it was a great time.
That's incredible. That's great. Thank you for sharing.
Yes, thank you. Thank you for asking. All right, well, thank you for being here, sir. I appreciate you. I think everybody's going to enjoy listening. So.
Awesome. Thank you, John. Thanks for having me.
You bet.